What's up YouTube? Welcome back to another video with Freddy the Fish. In this video we are not going to be talking about Fibonacci, but instead we are going to be talking about unusual whales. So in this video I am going to show you how to find some quality flow, and you can almost rename this video too of how to identify misleading flow. So I'm going to show you what may look like good flow first and what it really is versus what actually is good flow. And mind you, this doesn't mean 100% that the first flow is bad, but you're gonna see why. So here's some flow that I saw on 1231. This one came out through one of my filters that I have, and right here it flagged AVGO for a lot of bullish confirmation. So if you can see right here, you see that one, this is short dated for 22 days. Number two, we got some chunky premium coming at it, right? 164, 166, multiple transactions, all attacking the 250. And you see on the chain, it's between 90 to 94% on the ask. So at a quick glance, it looks like this could be something promising, right? And AVGO, somebody could be targeting it for a move to the upside. So this is one of the tricky things about understanding flow, is that you have to be able to look at all the different sides of it and see really what's going on. And some of us can be guilty of not fully looking through and seeing if there's other transactions that are happening. So when you have, for example, like this filter right here, which strictly only shows me what's on the ask, you could be missing the other side of the transaction, which could be transactions in the middle, no side, or even on the bid. So let me show you how this right here, which looks bullish, is actually not very bullish. So this could be labeled as really non-actionable, and here's what I mean. Number one, if you look at the size compared to the open interest, the size is much smaller than the open interest. So already off the bat, because the size is not bigger than open interest, this could already be a whale that is exiting a position or just moving a position around. That's one of the main things I want to look for, is to confirm that the size is greater than the open interest, and clearly that's not the case. Now here's the main thing that I'm going to look for. So once we start clicking on some of these things that unusual whales gives us, right? So for example, we have this layer tab we can click on. You can once again see all these transactions that show bullish, right? All calls, all targeting this right here for a total premium of 164K. So that looks good, right? This looks good right here. And if we click on these, we can see this transaction came in, right? We see major volume. So once again, this is all going to be a little misleading, and you're going to see why. So in order for us to actually go and look into this a little more, we're just going to remember this. We're going to remember this is AVGO on 1231, the 250 call, and they're targeting it for the 124 contract. So what we're going to do is we're going to write that down. We're going to write it's the 124 contract. We're going to write down that it's 22 days out. And now here's what we're going to do. We're going to go ahead and reset everything. We're going to reset everything, and we're just going to look at the raw flow for this contract right here. So we're going to type in AVGO. We're going to make sure we're on 1231, which we are. We want to see the best premium. Now on top of that, we want to see the majority of this. Mainly we want to see the bid and the ask. So we want to see both sides. We want to see if this whale conducted two sides to this trade before we jump into this trade that looks like it's bullish, targeting the 250. So we're going to see calls and puts. Meet Downward Dave. Dave buys call options without knowing where the major sellers are sitting at. Dave enters trades with hope, but Dave has no clue what's about to hit him.
Let it rip, boys. This one's going to the moon.
Don't be like Downward Dave. Trade smarter, learn Fibonacci today.
Finish him. Oh my God.
Doesn't really matter on the ETFs, indices, and ADRs because we're told that we only want to see AVGO. Now, all those transactions were greater than 100 grand, so we're going to make that premium only 100K. Now, if you remember too, the strike point for that transaction was at, the strike point was over at 250. So we're going to find here, and we only want to see nothing minimal less than 250. Okay. So already off the bat, you can see that that transaction for that day isn't really as good as it seems. So you can see right here, we're already seeing some bids that got thrown out there. So while there was buying for the 250 call, there was also selling the 250 call. See, there was buying for the 250 call, and once again, there was selling for the 250 call. So we can come to the conclusion that this whale did what's called a multi-leg type move. So they're doing something like iron condors, or you go through a library of different types of trades you can set up. And that's most likely what this whale did. Now you can even see right here, there's even different dates. See, there's 379 days for $328,000, and if you go over here, there's 379 days left for 116 grand. So we can almost say that those two transactions might be one right there. So to make this even more specific, let's dial this down and let's try to find the specific transaction that we were looking at, which was for expiry of 124. So if we go down over here, I don't know if this screen's gonna give us expiry. Yes, it does. So we're gonna switch that. There's the expiry. And off the bat already, we can see that there is bids that got thrown in there. So while the other screen was only showing us the calls, and it looked like this was a pretty directional type trade, we can see that this right here, there was also a sell, and that was on the ask, which that's a bearish trade. So that counters this right here. So all of a sudden, this trade is no longer looking like it's as bullish, as directional as we thought it was. When we're looking for good flow, we want to see a whale that is just targeting one side, not a whale that is adding multi-legs. And if they are, we don't want those multi-legs to be of equal value. We're not looking for him to place a bet where the price must remain kind of in the middle. He's going to collect a premium as long as the price remains here within this date. When we're looking for unusual whales flow, we're looking for a trade where a whale has high conviction of a direction that the stock's going to move in. And in order for us to find high conviction, we can't see different types of trades being thrown in there. So we just get rid of that, and now let's just change it to where the days to expiration is, let's say, 100 days. So DTE, we're going to keep it under 100, and that makes things even worse. You can see how there was different things that were thrown at AVGO, all that expire under less than 100 days. And this could be the same whale, or this could be maybe 2 or 3 whales, and they're playing it all very differently. But the main thing is we're seeing big money getting thrown, for example, buying the ask on the 250 puts. Right? And it was all 86% of this was on the ask. So we can say this is a pretty bearish trade, right? And there's a tag right there. So the point is, don't just look at one screen. You need to go back and really look at the raw data and see, is it completely directional like you thought it was? Now let me give you a better example of some flow that is actually better. And this is what I mean by confirming it's good flow. Now this next flow, if you follow me on X, you'll see that I posted it. I don't care for these names, but for that day, I think it was the most clearest one. And that one is going to be RIOT. So this transaction was for RIOT on the 30th. So this one came out on a different part of my screen. So once again, we're going to reset all this, and we're actually going to go to my, let's see, where is it at? Yep, size volume over interest openers. So there it is. And we're going to change that specifically to the date in question. So we're going to custom date range, and that was on the 30th. Okay, we're gonna sort it by premium, and there it is. So going down this screen, there's one of the transactions, RIOT. So RIOT, they bought the 12 calls, and they bought it for 221 expiry, 50 days out. They bought a total of $952,000 worth. It was mainly 96% on the ask. This is a bullish trade from what the label shows right here. So I'm going to show you why this is a much better type of flow. Right here, the size, 8,428 calls were bought by this one participant. And the open interest that already existed was 2,956. So clearly, this whale, we can say this opened a position because this is much greater than the actual current open interest. If we click over here on the layer tab, we can see that all these transactions were pretty much at the ask. You can see that there's 106 on the bid, 117, and they bought at 113. So not fully all the way on the ask, but closer to the ask. So we're gonna run with that one. So there's multiple big transactions. You can see there's the biggest one right there, 181. But once again, this is still not 100% clear. So now we have this in mind, right? We have RIOT, 12 call, 221. We're gonna further investigate. Okay, so what I did here is I narrowed down the actual contract and the days to expiration that transaction was that we originally saw on RIOT. So the original transaction was for 221 and it had 50 days expiry. So on the settings, we went ahead and changed that to where we can see just RIOT on that day. And we want to see all these right here. We could have gotten rid of the mid and the no side, but we just kept it on there. We're going to do days to expiration 50, and we only want to see that strike because that's the one in question that looked like it was good. So we're going to go ahead and put that right there. So there's a 12. So we start from the top. We see here's the 12, right? There's a transaction, premium of 1.67 million. We can see the size is way greater than the open interest. So we can say that this is an opening order. The bid and the ask was 112 for the bid, 118 for the ask, and this whale paid above ask 119, which means they want it in. The next transaction, 120 to 124, they bought on the ask. And once again, we know this is an opening order because there was open interest of 2,956 and they bought 4,834 contracts. So we can safely say that this whale is peppering in some massive orders and they want to get sized in for the 12. And all we're seeing here is calls. You see, guys, this is all the raw data right here. Once again, just like we did with AVGO, we could have seen right now bids start coming out, but you see there's none. And if you scroll down, you see your first bid, and this one starts in the 34,000. But look at how much less there are. And we can't really be for sure that they're selling this contract because look at the bid and the ask. It's only 2 cents apart. So this could have been potentially the same type of bullish trade that's mainly up here, but because the bid ask have gotten so close together, he got filled at better prices right here, which is a 2 cent, spread. Same thing over here. This is a 1 cent spread. So we calculate on the bid at 30,000, but it's literally a 1 cent spread. We can't say that this person is extremely bullish on all this money right here on this capital, but over here he's suddenly selling calls. We can't really say that because it's only a 1 cent spread. So if he got filled literally on 1 cent difference, I think it's reasonable to say that this is all the same bullish whale right here. So you can see the difference of the AVGO, where up here there was multiple different transactions on the ask and the bid, and it wasn't really a bullish directional trade with strong confirmation from the whale, compared to RIOT right here on the 12 call. And we can see all the way down the line that most likely this is the whale targeting a huge move to 12, which is not really a huge move because I think the price of RIOT right now it's like $10, but still very huge confirmation bias. And that's what you want to be looking for when you're looking for premium that's actually actionable. You want to look for premium that is not muddied by calls, puts, bids, and then ask, versus like Riot, where we see clearly it was all on the ask, major transactions, major money, size is greater than open interest, it's an opening order, and this is pretty much how you look for good flow. All right, so one last thing before we go is you also do not want to see this 2 arrows in front of the option flow that you think is strong. So I pulled up the major option flow for that same day, and we look at all the different strikes that money was sent to, and we sorted by premium, and we can see that actually the biggest premium came for the 11 put that was sold for 3.51 million. And if you click on this, it tells you that this was part of another multi-leg strategy. And if you scroll down, it'll tell you most likely what it thinks it is. So this is a short strangle. And if you go down here, the next one, somebody bought puts on the 11 strike. If you click on these 2 arrows, that was part of the transaction. So this whale sent in selling the 21 calls and buying the 11 puts. And it is most likely a bearish risk reversal play. Now, if you go down to the transaction that we made this video on, which is right here on the 12 call, you see how there's nothing? Same thing here, 12 call, those 2 arrows are not there. It just tells you that this exceeded the current open interest, and we want to see stuff like that. All right, guys, I hope you guys enjoyed the video. Drop a like, give me a comment, and follow me on X. Oh, and check out my book too. See ya.